Light FM. Daryl Hall, John Oates, Morning Dave. We're all here together, just a gathering of best friends. 18 here before 9. Advisory services offered through Second Half Financial Partners, LLC, an SEC-registered investment advisor. The opinions voiced and information provided in this material are for general informational purposes only and are not intended to provide specific advice or recommendations for any individual. To determine which investments are appropriate for you, please consult with a financial advisor. Second Half Financial Partners, LLC does not provide tax or legal advice. Please consult your tax or legal advisor regarding your particular situation. And speaking of friends gathering together, let's get together with our friend Philip Statler from Statler Financial Services and find out what's happening on Wall Street this morning. Philip, good morning. How are you today?
Hey, good morning, Dave. Doing well. It's the end of the week, and I know you and I haven't talked about it much, but next week I start some vacation on Wednesday. So we'll talk a little bit more after we get off the radio. But yeah, looking forward to that. It's been I don't know if you call this a good week or not a good week, Dave. When I look at the numbers, the Dow sure had a heck of a day yesterday.
Boy, did they. Backing up to yesterday afternoon, the Dow just absolutely had party time. New closing record, 51,562. It was up 875 points yesterday, and there wasn't any one stock that drove it up. Just I looked at the components, and basically about 3-1 on the Dow, they went up, and we're talking about like 1% changes, but that was enough to drag that price-weighted index up by 875 points. Standard & Poor's wasn't bad. I mean, it went up by 31. NASDAQ off by a few hundredths of a percent, down 23. But I'm seeing Texas being the cause for that because the Russell 2000 was up by 1.4+% yesterday as well. Sounds to me like we got a little antsy on the tech stocks yesterday. Fair guess?
Fair guess. And unfortunately, it looks like today, when we talk about the jobs and that kind of stuff, it is beating up the NASDAQ significantly this morning.
Which is because we had a really, really good unemployment report this morning. The federal data dump with the official job creation numbers from last month, they showed that we'd created 172,000 new jobs in the economy last month. And we were only expecting, one of my sheets was saying we were only expecting 93,000. So we overachieved by a mile. Unemployment rate you're going to hear about on the top of the hour news all day, 4.3%. That's what we were expecting. But almost doubling the number of jobs we expected to add last month. I'm just kind of betting that this is a good news, bad news day because the Federal Reserve governors have been using the word rate increase on the interest rates a lot more lately, and this kind of means they're safe to start pursuing inflation because it looks like the unemployment market is in pretty good shape at the moment, doesn't it?
It does, Dave. I'm looking at my numbers. My expectation was 80,000, so we more than doubled that number from Market Watch. And it came in really in line with what it was in April. April's number was 179,000, and now we're at 172,000. So we're really running month to month pretty close together. And then I look at, ADP, right? And it seems to flow kind of like ADP said it would. Jobs would be up, employment would gain. So you're right, though. It is taking that part of the picture as far as the Fed is concerned off the table. It doesn't look like they have to worry about jobs right now. They seem to be doing okay. So now they're going to be focused on inflation, and we know it's running rapid, and something has to happen. I can't tell you, Dave, how many conversations I've had with clients and friends and just about the whole inflation thing and what it's costing. And it's just, people just can't get over it. And I don't blame them. It's just going skyrocketing, and it continues to be a problem.
Absolutely. One of the best quotes I've heard came out of the president of the Kansas City Fed, Jeffrey Schmidt. Said, quote, unquote, the big question is now, do we stay patient? Our inflation numbers have crept up into the 3.5% range, which nobody likes. Is it temporary, or do we act? And that's the question. I mean, a lot of our inflation woes where we get up above the 3% number are due to the fact that we've got some scarcity issues, we got transportation issues, and we got energy issues, all traced back to the price of petroleum, which is traced back to the Iranian situation. There's a little bit of good news today with the Israeli incursion up into Lebanon. The Israelis and the Lebanese government have declared that they've got a common ground, but Hezbollah says blow it off. They're going to keep throwing rocks at Israel, so it's just a tiny bit of good news, and that's kind of holding us up being able to come to a closure with Iran. So there's really not a lot of good news on the horizon there. Once we get through this conflagration, are we going to be able to see the inflation rate head back down toward 2%? I don't know, but the Fed's got to answer their question within the next 30 days because they've got another meeting coming up.
Well, they do. I mean, you got the Treasury ticked up after all that information back over 4.5 to 4.53. And I was reading an article this morning about Iran and how we have really blocked them still from getting their oil out. And so that their inflation, the number I saw, I didn't see a number, but was their inflation is as bad as it was in World War II.
I mean, yeah, inflation in the economy in Iran has got to be looking like a banana republic down in South America in the 1950s and 60s right now. They can't. Their only export they've got that they can make money off of is oil, and we're blockading their ports. So I got to believe they're in a world of hurt that makes us look like Valhalla, doesn't it?
It does, and you would think that we could get a revolt going on the inside that would help us to get them, because they're also not getting goods from outside. So, and I think those are things they really need. And so you would think that we could easily overthrow things, but who am I? I don't know anything about war.
It was the Trump administration's assumption that they were going to be able to generate a revolt inside the country, but that so far hasn't happened. So we got a healthy reaction on the employment market. Things look fairly good as far as jobs are concerned, kind of crummy as far as inflation is concerned, and that's got investors a little nervous. Tidbits in the morning, the SpaceX IPO is coming up soon, and I've got one of the columnists in one of my tip sheets saying, expect somebody to stick it into your 401ks, mutual fund, and ETFs, and they're saying you ought to be concerned about that because the brokers are saying it ain't worth half of what they're saying they're going to try to sell it for.
Well, and here's the deal. I was having this discussion with some folks in my office yesterday. Is that it's going to be stuffed in indexes' throats. They're not going to have a choice because of these index funds, because we've already seen that the Russell 2000, I think, is going to pick it up in 6 weeks. Is going to be in that index, which means what happens? Everything that is or follows that index is going to have to go put it into their fund. It may not end up in the S&P 500 for another, 6 months to a year, but when it does, what happens? You got to buy it and put it in any index fund that has the S&P 500. And so that's going to artificially keep that stock running high. Seems to be at least what some people think. And so it's going to be a very interesting IPO because this one's just going to be different from that standpoint as to what it does. And you're right, it's going to end up in people's 401k because it's going to be in those index funds, whether they like it or not.
Absolutely, and that's always an iffy proposition. It caused a lot of us some real pain during the 99-2000 tech crash because of the same thing happening over again. Other stuff happening down the line. Oh, yes. Coinbase is going to issue a crypto-backed conventional mortgage. Given what's been happening to crypto lately, it's been actually stable, but it's been way low. I wonder whether or not that's good, bad, or indifferent. I found that kind of interesting.
I'm just looking at what it's done the last 30 days. It's, it had gotten back up to 78,000. Now it's back down to 62. So it's dismal right now this week. It's been down. It's 50% off its all-time high.
Yep. I was flippantly saying, it goes up from 70 to 72. That's fine unless you were one of the poor people that bought it at 105. That's
exactly
that's where it gets painful. Reports out this morning. We still have a few. How did the overpriced underwear industry doing with Lululemon?
Oh,
You can
Dave.
tell how much I love that company, can't you?
Hey, they did okay from the numbers of the last quarter. I mean, they beat by 1 cent a share, came in at $1.69. They're making money. Revenue was slightly ahead of expectations. I mean, if you look at the numbers from behind, they look pretty good. However, if we look at the report, they lowered their full year guidance for earnings and revenue. They're citing, just all the different headwinds that are out there. So, they had a good quarter, but looking ahead's not looking real good. They were down as much as 13% earlier. Right now, they're down 11.6%.
That's precipitous. Once again, the rule of thumb is guidance, 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 isn't it?
It does definitely seem to be more than usual this season as we continue to look at things. Like a DocuSign, I don't have information on the actual report for the current quarter, but their outlook failed to impress the analysts, and when it came to their revenue numbers, and so they were down as much as 4% earlier. They're down 4.8% now. Again, not because of earnings, but because of the current outlook for the next quarter. Let's see who else is catching the flu here. Let's see. Talked a little bit about memory stock, chip stocks. They're all kind of still falling from the Broadcom deal yesterday. Trying to see if there's any other company that really well, that's just an upgrade. Chipotle's Mexican Grill got upgraded by JP Morgan. And so that had their stock up about 1.5%. Now it's up about 2%. So I'm looking, and there's no other common household names I see on my list today.
Well, in that case, let's tie the ribbons on it here for the week. Yesterday was party time on the blue chips, not so much for the high-tech stocks. 45 minutes before we open, what are we looking at?
Dave, it's a mixed boat. The Dow is still up, not near like yesterday's numbers. It's up about 0.1%, $52. The S&P 500 is down 0.6, and the NASDAQ 100, as I indicated earlier, down right now 1.3%. That's $391. The Russell 2000 is down between 8 and 9 tenths. That's $25. On the other side, we've got the gotta flip the right button here. Silver, it's getting killed this morning, down 2.5. Gold's down 1 1/3. And crude oil is down about 0.6%. The number's about where it was yesterday, though. $92.50 a barrel.
All right, looking across the ponds over there, the Asian rim market was profoundly off over the night hours. Mainland Chinese markets, one of them was down by 2+%, so call it on average about 1.5%. European, on the other hand, they're looking at our unemployment rate and saying, okay, that's not bad. They're up fractionally halfway through their trading day. Getting my retirement together takes your eyes. Help me find how to find you so that I can take the risk out of my retirement plans.
Dave, it's easy to find us. We're at 863-382-0037 or on the web, statlerfinancial.com, where you can listen to any of our past radio shows and that type of thing, or click the button and schedule a phone call. It's that easy, Dave. And then this weekend, join us for the Statler Financial Radio Show, 6 a.m. and noon on Saturday, 10 a.m. Sunday morning on Highlands News Talk, 7:30 a.m. and 95.3 FM.
And us back together for a day or so, maybe next week. Otherwise, we'll catch you after the weekend. Fair enough?
All right, fair enough, buddy. Have a great day.
Thank you, sir. It's 105.7 Light FM and Statler Financial Services. Philip Statler.
Hey, folks, hope you guys have had a great week. Enjoy your weekend. I'll be back Tuesday. Join us then. Until then, have a great day, great weekend. I look forward to seeing you then.